Five, four, three, two, one. Good morning. It is Monday, the 28th of October. Brent crude oil slumping, dropping 5% after the open in Asia this morning, with Brent crude oil trading at 72.74. The news of the weekend, the Friday night attack, retaliation, call it what you want. Israel dropping bombs on Iran, seen as good news in the oil markets because it wasn't as bad as it could have been, I suppose. The question this morning I have for Omar Najia, the global head of derivatives at BB Energy, to kick us off this week: has the fat lady now sung?
Yeah, I think basically, if you look, the reason why we're off is that, as attacks go, this was apparently reported by US media that they warned the Iranians that they were coming, when they were coming, what they were hitting. They also flew over Syria, which means that the Russians could see them. So they also knew that they were coming. So it's a very telegraphed thing. And apparently they hit very little at all. The Iranian air defense, videos that I've seen on Telegram is astounding. It looks, like all these things exploding in the air. But the bottom line is, markets not disappointed but relieved that they haven't managed to do very much at all. So it was all this: we're going to cut your head off, we're going to whatever, blah blah blah, and then it seems to be like a little tap on the hand. Biden was quick to say that we now expect that this is finished. The Minister of Defense of Israel, Gallant, sent a letter to Netanyahu saying, we have to do X in Gaza, Y in Lebanon, and as to Iran, we have to ensure that they do not enter the conflict, quote unquote. So with all this kind of stuff, the stuff that matters in terms of oil, which is basically Iran, Hormuz, all that kind of stuff, that goes to the back burner, which means markets weak, which means more selling, which means, we break that 65 level on WTI and keep dropping. Meanwhile, rest of the markets surge, and when oil gets low enough, it'll follow. But for now, I think lower.
Peter McGuire, CEO of XM Australia. Peter, that's in essence, at least on the surface of it, one of the big unknowns that this market was stuck in limbo about: what the Israeli retaliation would look like. Would it hit the oil infrastructure and disrupt Iranian supplies, etc.? That now seems to be taken off the table, at least for the foreseeable future. The same thing happened 6 to 7 months ago in April, when Iran and Israel had a similar face-off. Now we go to the next sort of unknown with the US election. And ironically, one of the great potential outcomes of the US election, i.e., if Trump wins, could be the shutting in of Iran production. So we're all jubilation today that the Iran oil production, or jubilation in the essence that it didn't escalate into that space. Now the next big unknown is whether Trump does it, not the Israelis. Your thoughts?
Well, yes, a week out, and just for the volatility today, building on what Omar said, Sean, and hello to everyone from Sydney. Great to be here. When you see this market 4.5% down, spanked down heavily, I didn't expect that to happen. I know as far as the telegraphing of it and I think the framework that was put across as far as, the intention and how it was perceived and all of that, but I didn't expect the market to wash out as violently as what we've seen in, the last 6 or 7 hours of trade. Is just quite very surprising. So where does it roll? Well, we're 8 days away. You've got big numbers. You heard Joe Rogan, and if anyone watched it, and President Trump over the weekend, 33 million viewers. It's gaining momentum.
Had clearly nothing else to do. Clearly had a very big gap in their schedule to listen to the red-headed babbler.
Yeah, and you've got to say, we're 8 days out. I'm not sure how it's going to roll as far as what his intentions are going to be, where the marketplace is going to be, if he is elected, if he isn't elected. All of these factors are going to be worked through, and then naturally what impact that has to the drill baby drill agenda. Is he going to add the tariffs are going to be as aggressive as what he states, Sean? There are just so many components to this, or moving parts, that it's hard to digest. All I know is this: you've got an equity market fully priced, you've got a US dollar going through the roof at 104.50, you've got the yen being sold off, they have an election over the weekend, and the yen gets cratered, and the stock market's up 1.8% the Nikkei today. So, you know, it seems to be that momentum. We've got a big week of data, Sean. We've got non-farm payrolls on Friday evening.
Well, let's go to Japan, not a place we get to go to very often, but seeing as Bill Spindle is there, senior global correspondent at Slifer News, not that it's a coincidence or that it's connected that Bill is there choreographing the unprecedented political events of 50 years in Japan. But nonetheless, is there any cuckoo in the coal mine coming out of Japan today when we see for the first time, literally, I think in half a century, that the sort of dominating monopoly party has somehow had a slap on the face and has lost its majority? Your thoughts on that first, what it means, if it means anything?
Yeah, I mean, the LDP rarely gets slapped down like this. I think the last time it happened was 2009, but before that, it was a long time before. It rarely happens. It's a big embarrassment for them. It's going to throw politics here into, you know, turmoil for what that matters. And I think where it matters beyond Japan really is in the interest rates. I think, you know, this sense that interest rates were going to incrementally climb higher, Japan was going to normalize. That's back on the back burner until we see how this is all going to be settled out. The LDP is going to have to find, you know, yet another partner if they want to put together a government. Probably we're going to see, you know, a new prime minister after the current one, will become likely the shortest prime ministerial term in history. Similar
even shorter than Liz Truss.
I was going to say similar to the Cabbage episode in in UK. But you know, I think beyond that, it's kind of plugging along here.
Let me just follow up on that, because it does strike me that there's something more, you know, so not all is well in the Kingdom of Denmark or wherever the Hamlet quote is in Japan. I mean, it's not long ago we had the assassination of the longest serving Prime Minister, Shinzo Abe, and I wanted to get what you read on the tea leaves there. Is there anything more structurally at play here within Japan that one should be alert to, or is that over-egging any pudding?
You know, I think the main problem is the problem they've had, other than sort of with Abe, is a lack of real strong political leadership that can sort of push the country forward with reform plans that can kind of get the economy back, you know, moving again in a lot of different ways. And this is just a sign that that's yet further out in the future, and you're going to see more muddling along.
Omar, let's look at what's next. Obviously, Peter wasn't willing to bite the cherry on it and looking beyond the election, but where does this market get direction from next? I mean, ultimately, it seems that whenever we ask the survey, give the list of options, everybody points at the OPEC plus supply increase scheduled for December 1st. Will there be another suspension of that? Where do you think this market gets its next direction from now that this Iran-Israel thing is off the table for the time being?
So I think, you know, like everything else, the US election and what they're going to do in terms of printing money. So the short answer is going to be that if betting markets are correct, which I assume they are because they're showing, you know, Trump being favorite 65 to 35%, which is absolutely massive. So if Trump gets in, which I think he will, it will be structurally bearish for oil because, you know, he likes, you know, if you saw the Joe Rogan thing, he was saying, you know, black gold and I love oil and stuff, green and all this kind of stuff. So I think he's going to it's going to be bearish for the price of oil. That's on one shot structurally, right? So drill and that kind of that kind of thing. So make America great again with energy and all this, and invest and blah blah blah. On the other side, you've got basically more spending, much more spending. So I think Trump is going to spend a lot more than the Democrats would have, but that's not saying a lot because both of them are spending, you know, money that they don't have. And if you listen to Putin's speech recently saying that, the dollar, that, they printed, I think, $6 trillion, and the European Union, another like 3 trillion euros in order to buy stuff that they need without having, if you like, earned the money, but just by printing it. Further forwards, what you're going to get is massive devaluation of fiat currencies against each other, but also against real assets. By real assets, I mean things that people actually consume, and hard assets, stuff like precious metals, like real estate, like equity, like Bitcoin, that kind of thing. So I think basically what you're going to see is you're going to see asset prices rise as we get closer to November 5th, and rise even more when Trump is elected. And I think you're going to see oil fall. And when oil becomes a no-brainer as a buy, I think you're going to see a massive amount of speculative money that's going to come in and buy it. So I think it falls from here maybe to $50, something like that. There's a lot of rumors on different channels that Saudi wants to flood the market with oil just in case we have something with Iran. But I think that point is now moot, because there is no way. I mean, it's very, very clear to me that the US, whatever you want to call them, elites, whatever, have understood that, you mess with Iran and basically your economy goes bye-bye. So money talks, as they say. So I don't think that's happening. I think that's completely off the table now. So I think basically you're going to see everything move up in price except oil. Oil goes down. People start scratching their heads saying, why? And then you're going to see oil take off. So oil lower from about 68 on WTI now to about, let's call it 50. And then basically we see a resurgence on the basis of inflation.
Peter, the other news that happened over the weekend that got somewhat smothered by the news of Iran Israel was the China's industrial firms data came out for their performance in September, and they declined. Profits declined at a faster rate than the previous month, and year on year down a whopping 27%. Industrial profits at China's largest companies down year on year 27%. That's a big number. I mean, if that was a publicly listed company in the US stock market, it would fall off a cliff. What is this telling us about this China stimulus versus what seems to be a continuous conveyor belt of weak data?
Well, Sean, I think it comes down to a China debt bubble, and we all understand that. And I mean, the numbers you hear are frightening. And when you realize that the debt to GDP, China debt to GDP is in a jaw dropping 366% in Q1 2024. Now, that's double the ratio that you saw in 2008, Sean. That's catastrophic. And for every unit of GDP that they produce, the Chinese economy achieves debt burden of 3.66 units. So that gives us some sort of an idea. You're really behind the curve. How do you get through there? You've got deflation. You've got the non-financial corporates have the highest ratio at 171%, followed by the government sector at 86%. So this is the issue that they face. You've got that overhang as far as property. How do you deal out of this? Deflationary, stagflation, and it just seems to be going one-way traffic. Who's holding the debt, and how does that get played into the debt holders and bondholders? Where does that all end up? So I think it's going to be 25 is going to be a very interesting year for this to all be examined.
Bill, looking at this point of where we go next, I mean, OPEC Plus facing a big decision now. Oil prices without the fog of the Israel-Iran, they went up the mountain in October. They came back down again. We end the month pretty much where we started. And OPEC made the decision in September to postpone the supply increases from October 1st to December 1st, because when prices were loitering at these levels, What kind of decision do you think they're facing? The choice they have to make now regarding their next move. I mean, increasing supply into what appears a weak window would be rather unusual.
Yeah, I think they're facing a market that's going to have weak demand in pretty plentiful supply, and it's going to be a very tough choice, largely because what on the demand side, what Peter's talking about, China is really, I'm coming here from Japan, is really stuck in a very similar situation to what Japan was in with this deflation is a huge undertow on the economy. So even a biggish package of the type of stuff they're talking about is not really enough to do it. You've got a huge balance sheet workout that's going to take, many years to really work through. And in the time being, if they don't put in a sort of massive, direct stimulus money in people's pockets to fill that gap in the meantime, they're going to continue to see even biggish packages overwhelmed by this, undertow of deflation. And on top of it, a kind of demographic decline. And on top of that, a little bit of kind of energy transition stuff as a piece of oil demand starts to be eroded away. And then on the supply side, you've got plenty of non-OPEC oil coming into the market. It's a pretty tough spot. If they continue, they pretty much have to keep those barrels off the market, I think, or they're really looking at a steep drop.
Let's go to the survey question and take some guidance from the wider room on this issue. Profits at China's industrial firms in September fell 27.1% from a year earlier. Do you expect OPEC Plus to proceed with December 1st oil supply increases? Yes or no? It seems, and Omar referenced it earlier, that there's a desire to sober up the market a bit from Saudi, and we saw that in the infamous FT article in September. But that would be a bit of a surprise given that the obvious consequences of something like that. So yes or no, do you expect OPEC Plus to proceed with the December 1st oil supply increases, or will we see, like we saw in September, another punt down the road on that point? Omar, looking at the other wider dynamics, I mean, where we can take reference, you see equity markets continuing to reach records every week, gold records every week. Where do those markets tell us about the direction of where commodities or oil could go, and why is it not participating in the same sort of exuberance that we're seeing elsewhere?
Sorry, I was trying to
Yeah.
turn the thing on. So I think basically that in terms of the oil price, I mean, it's if you look at what happened this week, you had the BRICS conference. You also had one participant who told the Russian Foreign Minister Lavrov that he'd definitely go, which is MBS. He then didn't go, and basically he stayed and he met with Blinken. And now, basically, after that, he's meeting with people from, American banks and, BlackRock and Goldman Sachs and all this kind of stuff, right? So I think there's a kind of a really interesting dynamic there in terms of Saudi seems to be wobbling a little bit as to where it has its feet, if it's basically to the east or to the west. And that is bearish because previously they had their feet in with BRICS and they were aligned with that kind of economic agenda. And right now they're wobbling a bit. And if they're wobbling a bit, it means basically you go back to the days where Washington told them where the oil price should be, which was basically lower, and they would do whatever it took basically to get the price there. So I think the Saudi thing is the biggest thing in my mind that's, bearish the market. And all these rumors about them saying, that they want to make, they want to get the price of Brent to $50. I mean, there's no smoke without fire, so to speak. So nobody's privy to those meetings. I just think it's very strange that you get, first of all, the thing that says they want $50 Brent, and then you get MBS not going to BRICS, and then you get a meeting with all these, American banks and funds and what have you, basically, and a kind of distancing of Saudi,
which is commencing in Riyadh today with the
yes, the Riyadh Davos or whatever you want to call it, right? It's all extremely strange. So that to me is bearish. So that's why I'm thinking, whatever they do in December or OPEC plus or whatever it is, there's, you can see a bit of daylight now between the Saudis and the Russians, which you didn't know, which to me is negative.
Peter, just picking up on that point. I mean, this is where this sort of current era of oil supply cuts and more oil market management started 4+ years ago in March, April 2020, when Russia and Saudi allowed a lot of daylight to come between their positions, and there was a very public falling out, and then they came back together again quite quickly, mainly driven by the very dramatic events of COVID, but nonetheless,
Yes.
they came together for to manage the oil producers' way through COVID and thereafter, and did a pretty good job from the oil producers' point of view. Where do you think that's at now, picking up on the points that Omar is making there, sunlight between them?
Well, I think, Sean, I mean, when you're quoting the sort of numbers that Omar's suggesting, $50 Brent or $50 WTI, there's a big sell-off that we're going to experience in the short to medium term, if that's to materialize. So there's the first part. Is there going to be an end to any further geopolitical concerns, which did give a premium to price? And we understand that washes out very quickly. So is it all over as far as Iran and Israel now, or is it completely finished, or is this only a starting point? I think there are just so many different frames that need to be considered in all of this argument. Yes, you've got supply and you've got the OPEC considerations and Russia. We understand the fragility, as Bill highlighted, with, is China going to be a play out Japan version 2, and it's going to take a decade or two to wash through? And what's going to happen there as far as consumption? You've got a new player entering the market, could it be President Trump if he is elected, and the impact that has to the energy concerns, certainly in America, and then becoming an energy powerhouse and exporting. So all of these frameworks need to be, again, you're sitting up here and looking down, but going, wow, it's very difficult to even fathom. If you were to strip 40% out of the energy markets at the moment, price-wise, and we say they won't take action on that, I find that it just doesn't hit me between the eyes, that one. I'm a little bit like, wow. I think there'd be action from OPEC and the producers. I think they cut production dramatically to keep price at those sort of $60+.
Bill, just again, sort of rolling with this idea that we did see during the Trump presidency the last time, a pretty tight relationship between him and his team, his family, and the Saudis. Now we haven't seen that same warmth between the current administration and Saudi, but obviously they always keep a very, very productive relationship. And there's been a lot of recent years during the Biden administration talk of a grand bargain between Saudi, US, and Israel, big security commitments and so forth. Your thoughts on where that relationship sits coming out of the Biden administration, and where you think it goes? Obviously, this is a triumvirate. Russia is very much present, but very close to Iran as well, and so forth. How do you see all of this looking at this moment in time?
Yeah, well, I think a lot of it depends on the election, which, as Omar points out, betting markets say Trump win, polls show it, absolutely at a dead heat. Really hard to predict, I think, and it really does depend on which way it goes. Trump's relationship with the Saudis was, as all his relationships are, very transactional when it worked for him and they were doing things for him and for his family. he got along with him well. But when the Iranians bombed up cake, he sort of said, "Not my problem. Sorry, guys." I think the Biden administration's policies would largely be continued into a Harris administration. In the short to medium term, seems like an Abraham Accord thing that brings the Saudis in is really quite off the table for now. I wouldn't put it beyond happening sometime quite a ways down the road, but that isn't the dynamics we're in now. We're in a lull. The Israelis have done their thing. It looks like this round's over, but the underlying issues, whether Gaza, whether Lebanon, Iran's nuclear program, none of that resolved. So none of this goes away. It just goes into a period of relieved lull, only to be dealt with later.
Omar, looking at you mentioned it earlier, that the idea of the weak dollar or weak currency attracting the investment, and most notably in Japan, even the political news in Japan has seen the equity markets go up today with the weaker yen. Where does that play out going forward? We've seen a little bit of a recovery in the dollar in recent weeks. Your thoughts on the outlook of currency providing some direction of travel for the commodity, for the oil markets?
So in short, I think there's different currencies. Okay, so if you look at basically the euro, so the euro, I think, needs to move from where it is now down to about definitely below 1.06, or let's put it another way, highly probable below 106, and most likely closer to 102, 104. GBP, I think, has got a good possibility that it's, the low that we've seen, which is 129.07, is the low before you start seeing GBP rally against the dollar. So the idea being that both of them, both the euro and the GBP, are weak against the dollar, but we think the trend is the other way. So these are corrective moves. So I think basically the dollar is going to weaken. If Trump gets in, it's going to weaken. If Harris gets in, it's going to weaken. And it doesn't take a genius to kind of work out why. So first bit of evidence I would give is, the budget deficits, the debt. That's one. Two, equity markets. Everybody's buying anything. If it moves, buy it. If it doesn't move, buy it until it does. So that to me suggests that basically investors know that dollar will continue to devalue. If you've been alive since the Second World War, 1950 till now, you've seen every single major currency devalue. Year after year after year after year. So again, it's not a question of connect the dots. It's more kind of those things where you color in the numbers. So it doesn't take a genius. They're going to basically weaken. They're going to weaken against real assets, which means you don't want to hold cash in bank accounts, which means you buy whatever it is, whether it's equities or whether it's hard currency stuff that doesn't.
But we've had a lot of money go into cash. We've had a lot of money go into cash in the last 2 years, given the higher rates. That's now
it's all going to come
away.
out. Yeah, it's all going to move away. It's all going to get us an absolutely massive push to equity. So if you look at the S&P, my own personal thing is we see the S&P get to maybe 6,000, maybe above 6,000, 6,200, 6,300 by the end of the year. But I think in the next year after that, we're looking at like 8,000. So I don't think it's going to be, people tend to think that, what happens in the past is what's going to happen now and everything. But I think we're in a kind of new dynamic. So the US is spending so much money. They started to spend much more money during COVID. That spending hasn't gone down to what they normally did. That kind of deficit spending, it's actually increasing. It's unsustainable. You have people like Elon Musk saying it's unsustainable. You have the Fed saying, we're going to have a problem, blah, blah, blah. When that problem comes, I don't think it's going to come. This is why the Fed keeps decreasing rates, because they're paying so much on interest on their borrowings that they can't afford it anymore. It's the highest they pay more on interest than they do for defense. The only thing they pay more for is Social Security, and that's going to be eclipsed. So when that happens, when basically they're spending, so basically when does the dollar really drop? When you no longer have confidence in the currency. If you look at their treasuries, 1 year, 2 months, 10 years, 30 years, nobody's buying 10, 5, 30-year treasuries. Nobody. It's all at the front end, 1 month, 2 months, 3 months, because there is no confidence. I mean, if you buy 30 years, you get your interest, but your money's worthless in 30 years because, you won't be able to buy a French fry with it. So everybody's going on the front end of the curve, which means that the confidence is decreasing, which is why gold prices are going up, which is why equity prices are at records, which is why inflation is going up, which is why house prices are going up, blah, 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 blah.
Except oil. Peter, just on that point, just closing out quickly, the idea that the divergence, or will there be in this softening cycle, the US Fed big cut at first, the Europeans, Japanese, the Brits. Do we see a divergence here? The Americans may back away, the others will keep surging ahead, strengthening the dollar further. Your thoughts on the outlook for that divergence?
Well, Sean, is the 25 basis points baked in on the 7th of November? I think the jury's still out. There's probably 50, 60%. Yes, it's going to happen. But the argument is now coming with, as far as non-farm payrolls last month at 245,000, they're tipping 140,000 this Friday. So you'll get the number. We understand what's happening as far as GDP. 3%. The Atlanta Fed model's saying 3.4%. You could shoot that out, Sean, with better numbers even this week. You've got the growth of the Magnificent Seven. The numbers coming out there could be startling. We've got 4 or 5 of them. I think 5 of them are announcing numbers in the next 72 hours. So all of that factored in, Sean. Are we going to see a capitulation of equities? Should Trump get in? Are we going to see the Fed not cut rates, which in turn would, I think, put pressure onto the equity markets? And what happens to the likes of gold and silver and, that return as far as, from a risk perspective? Is that where the money's going to, I suppose, look at in the sense of how much they've printed in the last year? All I know is it's going to be volatile, I think, in the lead up to Christmas.
Last word for you, Bill. It's slightly indulgent on a personal level, that the news over the weekend that the Washington Post and the LA Times, both selecting not to choose, or basically, particularly the Washington Post, the owner of the Washington Post, the major shareholder of Amazon, choosing not to proceed with the recommendation of the editorial board of the Washington Post. You have worked for some of the biggest news organizations in the world. Is this a storm in a teacup, or is it something to be noted?
Oh, definitely something to be noted. I think you're already seeing the prospects of a Trump presidency reshaping the landscape, at least in terms of people hedging their bets. Bezos has a lot of investments in a lot of other things, and is, I think, definitely hedging his bets on that. And
Self-censorship, basically.
And a lot of other folks in the business. I think it's more a reshaping of the business landscape. You've seen, Elon Musk go from a Trump opponent to a huge Trump supporter in the last 5-6 years, right? It's across the landscape. You're seeing a lot of
Murdoch
hedged.
Yes, everybody wants a winner. Well, hopefully, on a personal level, we have one of those the infamous moments. Was it Dewey and what was the Dewey headline? Dewey wins and he didn't win, or whatever. The election in the 50s, I think. So yes, is the view of this room, OPEC plus to proceed with December 1st cuts. And that will be interesting, because I really think this is probably their week to move if they're to do a change, because they're going to have to come out with OSPs in the first week of November. So the window to abandon plans for December 1st is pretty much closing fast. Thank you, Peter McGuire, as always. Tremendous insights from Asia. Our Japanese correspondent, Bill Spindle, and of course, Omar Najia, as always, anchoring Monday mornings. It's not the same when he's not here. Oil trading, Brent trading below $73 a barrel, but recovering. The big shock of the weekend, not the shock, the absence of shock. The 5% sell-off has now climbed back. It's now 4%. As Europe and America wakes up, could that even sober further? Thanks, guys. Have a great week.
Thank you, Sean. Take care, guys.
Thank you, guys.